Good afternoon, and thank you all for joining us today. I am Desai, and I will be your host. Before we dive into today's agenda, let's start with my background. I started my professional career at Merrill Lynch with their private client group. At Merrill, we managed portfolios of high net worth individuals. While it was great to trade stocks and bonds, I was always curious about how these companies went public. Thus, after business school, I joined Pacific Crest Securities. PCS is a tech-focused investment bank with a global presence focused on software, communications, semiconductor, internet, and digital media. Here are a few transactions I worked on at PCS. In 2005, IPOs were at the peak, and it was amazing to take all these companies public. But that led to another question. How do VCs know what companies to invest in and which ones to take public? Thus, I joined Alpha Capital Partners. Alpha is a generalist fund with about $135 million of assets under management. My most recent transaction at Alpha was Surcon, a software-as-a-service provider company. Since then, Ninda.VC has been the recipient of numerous awards, and I have been awarded 2015 City of the Year Illinois for innovation and contribution to the venture capital and private equity industry, and Private Equity Fund Manager to Watch for 2017 by Corporate America. The United States financial market is the largest and represents 7.3%, which is $1.4 trillion of U.S. GDP. The five major subsectors in this industry are banking, asset management, insurance, venture capital, and private equity. While disruption has affected all sectors within the financial services industry, freedom and choice are changing the consumer mindset and alternatives market. Over the years, technology has changed the financial services industry, and now FinTech has transformed into digital banks and banking software, payments and remittances, robo-advisors and personal finance, blockchain and digital currencies, and personal finance, both business and consumer. While the total size of the U.S. FinTech market is difficult to reconcile, it is likely between 0.5 and 1.5 of total financial services revenue as reported by the U.S. Census. The 2008 financial meltdown led to a liquidity crisis for entrepreneurs, companies, LPs, and VCs. Fewer IPOs in the market means no exit for VCs, no return for LPs, and as a result, venture funds were on a decline. No new funds means less start of funding, low employment, and slow economic growth. Thus, on April 5, 2012, the Jumpstart Our Business Startups Act, or the JOBS Act, was introduced, which enables crowdfunding for all Americans. Crowdfunding is a practice of funding a project or venture by raising contributions from a large number of people, typically via the internet. The market is flooded with various types of crowdfunding options like donations, rewards, lending, equity, royalty, and even hybrid versions. Since 2014, the crowdfunding industry has grown from $16 billion to an estimated $34 billion in 2015 and is doubling or more every year. According to the World Bank estimates, crowdfunding will have a global market of $96 billion by 2025, which is 1.8 times today's global venture capital industry. The two most popular types of crowdfunding methods are rewards and equity. For reward-based crowdfunding, entrepreneurs pre-sell a product or service to launch a business and sometimes even in return for gifts or thank you notes. For equity crowdfunding, the backer receives a share of a company, usually in exchange of the money pledged. For NIN Ventures or Ninda.VC, it will be limited partner interest in the NIN Ventures Technology QP Fund. However, there is a major flaw with crowdfunding in general, and that is what Ninda.VC is solving. I come from an entrepreneurial family, so I can speak on their behalf. Entrepreneurs are brave and courageous bunch that are determined to change the way an existing industry functions. On that journey, they need a lot more than just financing. They need guidance or domain expertise, help with PR and marketing, recruiting, viable exit strategy, more often fallout financing, which crowdfunding portals are not able to support. On the other hand, crowdfunding exposed investors to a whole new asset class, which the normal population never had the knowledge or expertise to invest in. About 99% of startups fail. On top of that, low minimum investments like $1,000 does not give them a say or a board seat, putting investors at a high degree of risk. At Ninda.VC, we solved all those issues. Ninda.VC provides diversification. We take a board seat on all our investments and lend the necessary support that an entrepreneur needs to build a business like they would get at a traditional venture capital fund. And we are also in a position to gauge and be a part of the valuation process when it comes to addressing dilution and follow-up financing rounds. However, the most important part that investors care about is the ability to direct invest and enjoy direct returns, which is not the case with a traditional venture capital fund. Ninda VC is a crowd-funded technology venture capital firm offering membership interest under the Jobs Act and Regulation D of the U.S. Securities Act of 1933. Ninda VC is a unique and first-of-its-kind attempt to bring venture capital retail and give people the freedom to directly invest in a fund with the amount of their choice, which also leads to a better financial reward system. This offering is made via general solicitation and general advertising, which is permitted by Rule 506C as contemplated by Title II of the Jobs Act. This rule came into effect September 23, 2013, and we were the first ones to go live with a website and videos about our fund. Nin Ventures also became the first venture fund to be seen on a billboard, which was followed by in-taxi ads and other social media facilitated marketing. Learn more about us on Facebook, Twitter, LinkedIn, or Nin Ventures TV. Nin Ventures invests in Series A and Series B rounds of 3D printing, fourth industrial revolution, ad tech, financial services, education software, and other disruptive technology companies. During the post-war period, recessions and recoveries were mostly a matter of business cycles where demand recovered, GDP growth resumed, and employees hired. But for the past 2 decades, this pattern has been broken. Innovation and investing in new technologies and startups is the solution to job creation. But are we creating jobs at the cost of the consumer and in return damaging our economy? Currently, the U.S. asset management market is $51 trillion and the global alternative asset market is approximately $8 trillion and expected to be $14 trillion by 2020. Crowdfunding is expected to have a global market of $96 billion by 2025. While there is a huge potential for growth in this space, currently, majority of the crowdfunding investors are pouring their money in companies exposing themselves and the American economy to the high degree of risk with a 90% startup failure rate. Recently, the SEC approved Title III Jobs Act equity crowdfunding for non-accredited investors, which allows U.S. citizens, regardless of their income, to make direct investment via a crowdfunding portal. However, investment in a fund like ours is still limited to accredited investors. Given funds are less riskier asset class compared to crowdfunding in companies, perhaps it's time to revisit their investor eligibility, alter the definition of an accredited investor, and make crowdfunding available for everyone. With Ninda VC, we would like to truly democratize venture capital. For example, Yale. Yale is currently the best performing endowment fund in the United States. Since 2008 to 2016, Yale has increased its asset allocation in private equity and venture capital from 20.2% to 30.9%, out of which 16.2% is venture capital, compared to 13.7% in 2014 and just 10% in 2013. In general, most people have a three-dimensional portfolio, which includes stocks, bonds, and money markets. But if you look at Harvard and Yale's portfolio, they take the long-term approach and invest in alternatives like venture capital. Why is Ninda VC early-stage technology funds? Generally, technology-focused funds tend to outperform U.S. venture capital index, and historically, U.S. venture capital index tends to outperform U.S. private equity index and S&P 500. And first-time funds tend to outperform non-first and all venture capital funds. Who can invest in Ninda VC? One must be an accredited investor and verify themselves as an accredited investor before they can invest in the Nin Venture Technology QP Fund. An accredited investor is an individual with an income of more than $200,000 per year or a joint income of $300,000 in each of the last 2 years, or has a net worth exceeding $1 million either individually or jointly with his or her spouse, excluding the primary residence. For an entity or trust, any assets in total of $5 million qualifies. There are multiple ways to verify if you are an accredited investor. For an individual, it's income, asset, and third-party verification. For an entity, it's asset and third-party verification. So what are some of the multiple ways of investing at Ninda VC? There are a wide range of options when it comes to investing in Nin Ventures Technology QP Fund, using checking accounts, savings account, defined benefit plans, self-directed IRA, and digital currencies. A defined benefit plan is a retirement plan that can invest in a wide range of securities and investment products, including venture funds. Some of the advantages of investing from a defined benefit plan are all contributions made to the plan and subsequently invested are top-line tax deductible to the business, whether the business structure is a sole proprietorship, LLC, LLP, PC, C Corp, or an S Corp. The investment growth is tax deferred under the umbrella of the defined benefit plan. The contributions might be significantly greater than that of the 401 profit sharing plan to help increase the retirement savings account for the business owner. To invest in NIN ventures using your defined benefit plan, you must first sign up on NIN.VC, verify you are an accredited investor. The next step is to establish a defined benefit plan with Robin Weingart & Associates, or a provider of your choice. Once the plan is established and the contribution is calculated, you can complete the subscription and payment process on NIN.VC. We also let investors invest in our fund using retirement plans, for example, self-directed IRAs. Self-directed is a descriptive term that is used to describe how some IRA providers administer the assets they hold. With a self-directed IRA, the client controls what their IRA invests in. Self-directed IRA allows investors to hold alternative assets within their tax-deferred retirement plans, such as private placement and venture capital. Like any IRA investment, a self-directed IRA has built-in tax-deferred growth, and thus an individual will not pay capital gain tax on the growth of the investment. The return will flow back to the self-directed IRA and will not be taxable to the account holder. A self-directed IRA allows for true diversification that is otherwise not achievable in a standard IRA portfolio. To invest in NIN ventures using a self-directed IRA, you must first sign up on NIN.VC, establish an IRA account with the interest group or a provider of your choice. Once the plan is established, you can complete the subscription and payment process on NIN.VC. Digital currencies, for example, Bitcoin, Litecoin, Dogecoin, are emerging as a new form of alternative payment and global currency. We at NIN Ventures understand the significance of this change and thus allow digital currency owners to attain liquidity in return for our investment in the NIN Ventures Technology QP Fund. Now let's go through the investment process step by step in detail. The first step is to visit NIN.VC and sign up. Sign up is simple. First name, last name, email, password, and acknowledge that you are an accredited investor. Once you sign up, you get access to our marketing materials, that is PPM, investor presentation, and other suggested readings. You get invited to attend our calls and events. You can also schedule a one-on-one meeting with us at our office or online via Skype. Once you decide to make an investment, accept the risk and disclosure statement that will explain what venture capital investment is. The next step is to verify accreditation. Once that is in order, it's only a matter of filling out a subscription document and a W-9 form on NIN.VC. The last step is payment, and it's as simple as selecting the payment method and the amount you wish to invest. Please note that venture capital is a high-risk, high-reward investment vehicle, and we strongly recommend reviewing the other suggested reading on our website before making any investment decisions. Once again, thank you for being on the call. Sign up on NIN.VC to begin your investment process, and feel free to reach us at contact@NIN.VC or 312-953-0930 to schedule one-on-one meetings or with any other questions. Have a wonderful day and happy investing.